But talking a bit more about earnings reaction, Lupin is the stock on our radar. That one is trading with a cut of around 2 to 3%, wherein the margins came in at a big disappointment, down to 9% level versus the double-digit figures that we had seen last year. We are now joined by the management of the company, Mr. Nilesh Gupta, who is the Managing Director at Lupin, as well as Mr. Ramesh Swaminathan, Executive Director, Global CFO and Head Corporate Affairs, to make sense of the performance and talk to us about the earnings fine print as well. Hi gentlemen, good afternoon. Thank you so much for speaking with ET Now. Let me first begin by asking you about the margin outlook, because this time the biggest disappointment was the 9% level that we saw on the margins. The guidance was of around 16%. Do you expect the company to get back to those levels in Q4 or coming quarters?
Absolutely, and we're not happy about that. I think the adjusted for the one time, the margin was 13.7% in Q3. Even for the next couple of quarters, we broadly see margins only at this kind of level, and I think that's driven by a few elements. First of all, from the top line, I think at the gross margin line, you see the compression. Part of that is the business mix. Part of that is inflationary pressures. We've had a nice growth in the US, but we've had the growth on the innovation portfolio, but we've had degrowth on some of the key products like famotidine or saltamivir, and that has kept the margin in pressure in the US, and with that has been the overall margin pressure as well. But the next 2-3 quarters is going to be about optimization to inch up on that margin a little bit, but we really see major uptick in Q2 in H2 of FY23. With new product launches happening, a lot of our optimization efforts coming in, and then in FY24 you see the margins going back to well over 20%. So not happy with the miss. We talked about 16%. We are more or less around 14%. But I think there's there's a few products that have caused the compression in this margin. But we do see it picking up over the next 2-3 quarters. Ramesh, would you add?
Yes, I would. Just to give a little more color to, in fact, this particular quarter, there were some extraordinary items, some one-time items, so to speak, which have been included in the overall financial results. There were some residual metformin returns from retailers and consumers, which are not expected. This recall, as you recall, might actually came in way back in FY20.
Mr. Swaminathan, this is Vinny joining in as well. I just want to talk about actually, do you expect such product recall actually, and what is the provision in the upcoming quarters then?
No, I think we're done and dusted with that. This has been a one-time, so to speak. It was absolutely unexpected, and this is what we have done for this particular quarter, but we don't expect this to occur in the future.
Well, yes, let me talk to you about the US sales as well, because the problem that we have seen in the pharma sector this time, and this is a commentary we've heard from the other managements as well, that there is a problem of price erosion in North America. What is your sense with respect to that? Do you expect it to stabilize soon?
So I think it stabilizes only with meaningful new product flow. Otherwise, there's always single-digit decline that happens on the inline products. Obviously, we ensure that we keep our market share at optimal levels, but it's a single-digit decline that will keep happening. The only way to stem it is to have meaningful new products. We've had some great products like albuterol kicking in, but in the second half is when you see products like, in the second half of next fiscal is when you see products like PEG-G, you see products like Spirova, you see products like Suprep coming in, and even those are going to be in a build mode. And really in FY24 you see the entire pipeline. You see injectables, you see inhalation, you see biosimilars. So I think the new product flow is what's going to bring sustainable gross margins and sustainable EBITDA margins, especially in the US. And I think that's the reason why it's going to be, the next 2-3 quarters are going to be kind of similar to what we have right now, but you see that uptick thereafter.
Mr. Gupta, I'm going to actually continue with you and talk more about the US markets as well. So what is the outlook actually for the US market, and do you expect pricing pressure to continue in the US then?
So the strong recovery in the US, first of all, we're already doing much better numbers than we did last year, right? So like we talked in the past, our goal was to keep the number firmly over $200 million. We've had that in quarter three as well. The next 2-3 quarters also broadly will remain there. My point on the margin is really driven by what is driving those sales as well, and we need to have more complex products coming to market to be able to improve the margin. That's what happens later. It is really the new products that will help drive sales, that will help drive the gross margin, that will help drive EBITDA as well. In the meanwhile, obviously, the existing products chug along. The next 2-3 quarters will more or less remain at this kind of sales number in the US as well. Obviously, the US is one part. The other part is India. That impacts the overall numbers as well. As you know, India has been growing broadly pretty strong. Little bit up and down around the COVID portfolios and the like. But obviously, that's been a story of consistent growth, consistent operating leverage as well.
Okay, so the new products will drive the revenue as well as EBITDA margin expansion in the US business. And you talked about the India business as well. So let me scratch that point a bit further. Yes, the growth is moderate at around 8%, but this is still a lot lower than what peers have reported. What is your sense on the India business going forward?
Sure. So I'm not sure about that number. The market grew by 10.4%. We grew by 9.5%. But if you look at you need to peel the onion a little bit. If you look at the chronic segment, the market grew by 10.2%, and we grew by 10.2% as well. As you know, the market is roughly 2/3 acute, 1/3 chronic. Lupin is actually the opposite. Lupin is, and that's a designed initiative that we drove over many years. Our business comes 35% from acute and 65% from the chronic segment. We believe that the chronic segment will lead to long-term growth. We've seen that in the past. Over a 5-year period, we've seen that we've grown on. The chronic market grew by 11.5%. We grew by 14.2%. So you see that 30-40% incremental growth over the market growth rate. So I think there'll be periods of time when you'll see this kind of lumpiness and the like. A lot of the lumpiness has been driven by the acute portfolio, where we almost by design are weak. But I think the chronic portfolio is where we focus, and areas like cardiac and diabetes and respiratory. Our overall rank in India is number 6. In the chronic segment, our rank is number 4. So clearly the focus is there, and that is what we need to continue to deliver on.
Okay, Mr. Swaminathan, I do want to understand one thing. Now, in the last quarter, you had announced the restructuring in the specialty business, and you have taken cost-cutting measures as well. So, did you see any of these benefits coming in Q3? What is the update on that?
Yeah, absolutely. So as we said, we have actually restructured our specialty business. So to the extent, the burn that there was in terms of the manpower costs on salesmen, that's come down quite a bit, and that's reflected in the overall manpower cost itself. Insofar as our other initiatives are concerned, we had kind of, we realized that we have kind of invested ahead of the curve, and to the extent there is ample scope to look at reduction across various lines. In terms of our, manufacturing capacities, in terms of our overall idle time associated with that, in terms of SG&A expense and the like across various geographies. So those are initiatives. They are well thought out, and we believe that working on this, we would get the results that we desire. Apart from that, the initiatives on the gross margin line, in terms of procurement excellence, in terms of optimization, in terms of routes to synthesis and the like, we continue to work on those as well. We are also working on, the NCE spin-off, which we spoke about, last time around as well. So all of this will certainly bear fruit, and that is the reason there is optimism on our front in terms of the EBITDA movement to more respectable levels. This will take time, and we believe the next couple of quarters would actually, be in the same level as we are seeing today. But in the second half of next year, with newer products coming in, everything on the top line, so to speak, with the products like Suprep, and of course Spiriva, and Pregnacys, and all of this will certainly help in taking the top line to a different level in America. and flow through from EBITDA perspective as well.
Well, Ramesh, you talked about a whole list of initiatives that you are undertaking, but could you help us quantify what could be the benefits of these?
We would not like to do that, but we do believe that there is going to be a significant improvement in EBITDA margins when all of these come through.
Lastly, Mr. Gupta, I do want to ask you on one thing, is that Spiriva is actually a large opportunity for Lupin. So what is the next process over there, and by when do we see the launches for the same?
Sure. So we had a CRL that we've responded to on Spiriva. So we had guided to a late H2 launch. As you know, we did a settlement on the litigation as well, so that that brings us that certainty of when to be able to launch it as well. As of now, I don't see any showstoppers in being able to launch the product. We are already in launch planning mode.
Okay, Nilesh and Ramesh, we will let you go on that note. Thank you so much for making time and speaking with ET Now. We hope to catch up with you soon as well. But moving on and shifting focus back to the market.